I'm going to list a couple of variables, note them down because we're going to apply them to the charts in a second. The first one is 4-hour market structure. And then we have premium. And discount. So I primarily trade EU and GU, and I utilize DXY to show me which direction I need to sell or buy. So if DXY is bullish, I'm going to sell EU or GU. Our last factor is quite simply just a POI. And when I say POI, I'm just referring to an order block slash FEG. Now these two variables will be placed within our premium or discount. POIs I like to utilize are primarily from the 4-hour, 2-hour, 3-hour. I've done that backwards, but you get the gist, and 1 hour. So the 4-hour primarily is going to show you the exact direction that price is heading. 4-hour breaks of structures and then retracements into premium or discount is your trade idea. You want to see liquidity being taken within premium or discount after we've got direction of the 4-hour. So for example, if we have a bullish trend, this is a 4-hour time frame, we have a 4-hour break of structure, and we want to buy within this region. Why do we want to buy within this region? Is because if you place your fib from the most prominent high, which is this one, and most prominent low, your fib will look like this. And this is the 50% range, which is within discount. You're going to get a POI within this region, within discount, and Asia's liquidity of a 4-hour candle, primarily the 2 AM, is going to get swept within this region, within a POI, and that's your buy, and that's in line with the trend. This is what we want to see. 4-hour liquidations in line with a 4-hour trend. If we do vice versa, we got a 4-hour bearish trend, 4-hour break, you're waiting for a 4-hour high to get swept within this region, within premium. There might be a 4-hour order block here, mitigation, and then you have your 5-minute entry around here within OTE, etc. And then we target external liquidity down here. So to ensure this isn't just hindsight and stuff like that, the trade I took last week on Friday is on screen right now. I doubled my position size, 1% risk times 2, so 2 positions. I was so confident in it, and when I'm confident in a setup, I'll double risk. It passes the challenges quicker. So if we get straight into the 4-hour structure, on Thursday at 2 PM, this 4-hour candle here, bullish one, it failed to break this high, and instead we wicked above and liquidated this range. When we wick above, this means lower prices. Along with this, before we wicked above, we actually inverted this 4-hour. So it's signs of bearishness before we've even had this large sell-off here. We've also got a 4-hour break within here. Now, if we go down to the 3-hour, another 3-hour break. I say another, the first one. And then even after the trade played out, we've got another 3-hour break here. So what I'm trying to explain is that if you see multiple breaks within market structure, the market's telling you where it wants to go. It will just need to retrace back into OTE within this region, and that's why we had that sell-off. This is along with daily structure as well, which I'll get onto in a second. But this is ultimately a higher time frame change of character, which is this break here. So this break here is a higher time frame change of character, and then we have that pullback into premium. You see how premium discount aligns. And to see the sell-off more clearly, On the Thursday, we wicked above on the daily, causing this third candle to drop bearish. If you're aware of CRT, then you know that this became the target. So that's why I was confident. The 3 hour, 4 hour was already showing breaks of structures and also inverting bullish fair value gaps. And when we're wicking above on the daily as well, it's a lot of confirmation that we're seeing a sell-off. When it comes to intraday trading, always wait for a 4 hour candle to open because it's going to push higher or lower to liquidate the previous or break it. So when we look at premium and discount of the trade here, we have our most prominent high, most prominent low. So I place my fib on that range. As we can see here, price is wicked up into premium and also coming into this 1 hour fair value gap. If we go up to the 4 hour time frame, it is also just the end of a 4 hour order block. So when I say 4 hour, 2 hour, 3 hour, 1 hour POIs, they can kind of mesh together. And if you've got more than one, then it's happy days. So we're within premium, we mitigated this 1 hour inefficiency / 4 hour order block. We're confident on sales and we've taken liquidity of this 2 AM 4 hour high, which is also Asia high. For entry for me, I don't go below 5 minute. Sometimes I utilize the 15. The 15 can give a large 15-minute fair value gap. In this instance, I use a 5-minute change of character. The change of character for me was this 5-minute break of structure. Along with a 5-minute break of structure, we had we inverted the bullish 5-minute with this 5-minute close. So I was confident that we would push up and sell off. And my sell position, I'll put the entry back on screen now. It was around about here. Entered once here and then entered again around this region again. We did come up to wick this 5-minute order block. You know, it was wicking up and I was thinking, sometimes psychology wise when you're in the trading, you're seeing price push up like this, you're thinking, but you gotta hold your own, if that makes sense. You just gotta have a bit of balls about you if you wanna be a trader. You just gotta set it. If you wanna watch it, you can, but just don't come out when it's doing this. You know, it's just respecting a 5-minute order block. Just if you can't sit and watch it like that and you come out early, just come away. Set your target of a 4 hour low. In this instance, it's Asia's low. These are actually relatively equal lows as well. So, and plus we had external liquidity of this low down here. But I came out around this region because that's the percentage that I needed. But yeah, 5-minute change of character, retrace into premium if I'm selling. 5-minute change of character, retrace into discount if I'm buying. That's my entry method. Just like we've seen with this break here and this retracement into OTE, it's the same on higher time frames in regards to the sell-off that we had at the start of the week. If we make it clearer, when we have the wick above lower prices, price then needs to retrace into OTE, and it quite nicely mitigates the 0.79. I don't think it gets it. It's very close, put it that way. If we look on the 4 hour, we have that change of character. You see what I mean? Red line is the change of character, 4 hour change of character, retracement, and then sell off. So whatever's happening on the lower is happening on the higher. It's just the higher takes a lot longer to occur. But yeah, hope you enjoyed the video. If you found it informative, if you found it useful for your trading, like the video, subscribe, and I'll see you on the next one.